Hello, I'm Tara Weber. Welcome to Market Call. Today on the show we have Kim Bolton. He's the president and portfolio manager at Black Swan Dexteritas. He'll be taking all the questions you have on technology stocks. So welcome to the show. Let's get that number in quickly. The toll-free number is 1-855-326-6266, and you can also send an email to marketcall@bnnbloomberg.ca. So turning to Kim now. Kim, we're seeing such a shift in the markets today after what's been a very volatile 4 days. Now all of a sudden we're seeing that pullback in energy and materials, but equities are starting to gain. Do you think this is a sense of what you've been talking about with that buy the dip mentality?
Oh, I wouldn't say it's a buy the dip.
Were they bombers or something?
The modus operandi should be sell the rallies at this stage. There's just an awful lot of uncertainty out there. We've been pretty defensive in both our fund and the separately managed accounts. What I mean by that is that, we have a long stock portfolios that are being, basically neutralized by our short equity indice positions. And so the unrealized losses in the stock portfolios are offset by the unrealized gains in with the hedge. Year to date, we're down 1.8%, which is a heck of a lot better than the market. But the good news is that the runway or the upside in our stocks is getting longer and longer. So we're quite excited by the volatility that's going on in the market.
Okay, I actually meant sell the rallies. That's what I have in here. I don't know why I said buy the dip. But I guess one of the things I'd be asking for is, where do you see some of the stability right now? Because it just feels as though everything is so volatile.
Yikes. Where's the stability? I think having two things. Number one, actively managing one's stock portfolios. That's versus, the last dozen years where, 85% of the time the market would go up. And so you could buy on the dips. But now with the inflationary concerns, rising interest rates, the geopolitical events that keep on coming our way, you just have to be very, very active in the stock market. It's not as though I guess it's more like a trading environment rather than an investment environment.
That, of course, is a little scary for new investors right now. How would you best advise them, just given everything that's going on?
Well, if it's more of a trading environment and it's more of a selling on the rallies until some of these uncertainties get clarified, you just have to be able to have some trading tools in your bag to actually be able to protect your stock portfolio. And how you can do that is, or the way we do it, is actually shorting the equity indices. And it just sort of neutralizes the portfolio. So that's what I'd recommend.
Okay, thanks so much. That, of course, is Kim Bolton. He's the president and portfolio manager with Black Swan Dexteritas. He's going to be taking your calls this hour on technology stocks. So get those questions in. You can call toll-free 1-855-326-6266, or you can send an email to marketcall@bnnbloomberg.ca. Welcome back to Market Call. We have Kim Bolton on the show today. He's taking your calls and emails on technology stocks. And Kim, right away here we have an email. This is from Michael, and he says, Twilio has been a big winner for a few years, but has halved in the last while. Is there a fundamental problem with the company, or is this a buying opportunity?
Great question. So let me just sort of back up. Twilio, it offers a cloud communications platform for its clients. And the clients, developers, then use these application programming interfaces and other software tools designed for specific use cases to develop in-house communication mechanisms. So basically, the bottom line is that Twilio is sort of the super network out there designed to communicate effectively with all the connected devices globally. So it's a key company, and it's really sort of a poster child when it comes to the software application side. And, a lot of these software application stocks that are in the IT cloud stack, they're relatively new as publicly traded companies, and they're still getting their footing. But most importantly, they're yet to be profitable. And so when you had a rollover in the stock market, everyone took these unprofitable software application companies to the woodshed. But they're still very, very solid, currently trading about $138. We have a price target of $239. So I'd recommend, we own it in the portfolio. We also own it in some of our separately managed accounts. Buy some here, buy some down at 130 and then down at 120, and use a stop of about between 110 and 105. I hope that helps.
All right. That's a big help. Let's head over to the phone lines now. We have Margaret in Vancouver with a question for you. Margaret, go ahead.
Hi, thank you for taking my call. I want to find out, I want to get some NVIDIA, but the stock has been coming down. It's down to 220 or something like that. What causes the big drop like this, and what is the future perspective? I also own some Broadcom. Should I get to NVIDIA, or should I buy more of Broadcom? Thank you. I'll listen to your advice.
Margaret, thank you very much for your question and your comments. I'll talk a little bit about NVIDIA. Currently, right now, it's down about 32% over the last 100 days. Currently trading around 227. We actually have a 12-month price target of 336. I just sort of warn when I say about 12-month price targets, because you don't really sort of hold them for 12 months, but that is sort of the average analyst price target for NVIDIA up at 336. So NVIDIA, to us, it remains the greatest secular growth story in the whole semiconductor business. It's riding the tailwinds, including the transition to the GPU and the data center for gaming, for edge computing, autonomous vehicles, and AI. It is really the poster child when it comes to the semiconductor side. Now, NVIDIA is a designer. So they design the chips, and then they send them out to foundries or manufacturers like a Taiwan Semiconductor or to a Micron, and they actually build the chip for them. So they're a designer. NVIDIA's cloud business should see continued secular strength over the coming years as the GPU, graphic processing unit penetration in the data centers increases. So it's just a key part of the portfolio, part of that whole semiconductor side that should be someone of an investor's growth portfolio. So you can have a designer represented by NVIDIA, you can have a foundry represented by Taiwan Semiconductor, and then a manufacturer like a Micron.
Okay. Now we have Yuri on the line from Keene, Ontario. Go ahead, Yuri.
Hi, guys. I appreciate you taking my call. I really am in love with Microsoft, but I'm asking, did you like the deal with Activision Blizzard? Was that a good buy? Was it a good deal? Thank you.
Thanks for the question. Well, the whole deal of Microsoft buying Activision at a price of $95, it's. I hope it goes through because we actually own both of them. I think it's a great deal for Microsoft, and it actually sort of bails out Activision, which had really sort of got beaten down because of all the shenanigans that the management had going on of harassment and so on in the workplace. So, you know, Activision Blizzard is the largest of the gaming companies out there. And so there is a bit of a concern, and that's why it trades at a discount, currently trading, what, $81, $82, and it has a takeout of $95 by Microsoft. I think it will go through. There is a breakup fee of $3 billion that Microsoft would have to pay over to Activision Blizzard. So that really tells me that they're pretty confident that it's going to come through. Now, mind you, you're going to have to wait around until probably into the fourth quarter of this year, maybe the first quarter of 2023. But it's a good match, great for Microsoft.
Perfect. Well, of course, we have so many more callers that keep coming in, so keep those calls coming in. That, of course, is Kim Bolton, President and Portfolio Manager at Black Swan Dexteritas, taking your questions on technology stocks. That phone number, 1-855-326-6266, and you can send an email as well to marketcall@bnmbloomberg.ca. Welcome back to Market Call. We have Kim Bolton on the show today. He's the President and Portfolio Manager at Black Swan Dexteritas, taking your questions on technology stocks. And next up, we have Kevin calling in from Calgary. Go ahead, Kevin.
Good morning to both of you. I'd like your guest view on Converge Technologies. I'll hang up and listen.
Thanks, Kevin. All the way from, well, in your backyard there, Tara, in Calgary. Converge Technologies, symbol is CTS. You know, it's a pretty big company. It's just over $2 billion market cap. Currently trading, I think it's around $9.25, $9.30. First of all, we don't own it, but we follow it. Actually, we have it in a few of our separately managed accounts, but it's not in the BSD Global Tech Hedge Fund. But we do have, well, we have, together with all the other analysts that cover Converge, you know, sort of the average 12-month price target is $12.32. So, Converge, it's regionally focused end-to-end IT service provider. And so it basically distributes storage devices and systems and hardware and software, sort of does the whole end-to-end IT service providing. And it does it, it builds its business by acquiring other, sort of identifying and acquiring other IT service providers, and they pull it together, somewhat sort of like a Constellation and building out. But Constellation is more about vertical versus Converge is more about a horizontal offering. Their offering basically has two solutions. It's blockchain solutions for the data center infrastructure, and then IT spend optimization solutions with, you know, analytics and cloud delivery and so on. So currently trading around $9.25. Buy it here, buy some down around $8.75, and then $8.25 with a stop down at $8. I hope that helps, Kevin.
I'm sure it does. Next, we have Nick calling from Montreal. Go ahead, Nick.
Good afternoon. Thank you for taking my call. My question is with regards to Adobe. It's a great company, but I find the stock is overvalued. Therefore, what would be a good entry point to take a position for a long-term hold? And do you currently hold the company? We'll hang up and listen to your feedback. Thank you.
Thanks.
Thank you, Nick. Adobe. We don't own it in the fund, but we do own it in some of the separately managed accounts. Yeah, it's like a lot of technology growth stocks. It's a bit on the back foot. It's down 12% over the last 30 days, down 35% over the last 100 days. Currently trading around 450, and we have together with the other analysts have a 12-month price target of $650. This is a massive company, and it's really sort of the poster child when it comes to one-stop production, design, and content creation, marketing, and web mobile commerce. But it's also sort of branched out into other service offerings on the marketing and analytics and CRM and so on. And thanks to their Magnetico purchase, Adobe is now, it's a key e-commerce software as a service vendor. I like it. It doesn't sort of fit right now into the fund, but we do have it in some of our separately managed accounts. Thanks, Nick.
Okay. Now we have one more caller. Let's try get him in. This is Kumal in Ajax. Go ahead, Kumal.
Hi, Tara. Thanks. You and Andy are doing an awesome job, and always appreciate that. And I have a question for Mr. Bolton. And my question is on MU. I have been holding over 5 years, and whether I want to keep it or sell it and buy TSF. Thank you.
Okay.
Sorry,
Micron
what was
Tech.
the stock again?
Micron Tech.
Oh, Micron. Oh, okay. I love this stock. Micron Technology. Where do I start? And I'll try to keep it as short as possible, Kumal. So currently trading about 79.80. There's a 12-month price target of 110. So there's a bit of a runway out there. It's actually held its own over the last little while. So as I mentioned before, there are basically four moving pieces when it comes to the semiconductor side. Number one are the foundries, like a Taiwan Semiconductor. Number two are the manufacturers. The manufacturers actually design and manufacture their own chips. And Micron is one of the leaders on those manufacturers. The second area are the designers. We talked about NVIDIA or like an AMD. And then the fourth area are the equipment suppliers, like a Lam Research or a KLA or Applied Materials and so on. But Micron, it basically provides memory and storage technologies geared more so to the memory side of the chip and the DRAM. It does have some NAND or non-memory products, but the company operates under sort of four segments: the compute and networking side, the mobile business side, the storage business, and the embedded business. So it's spending a heck of a lot of money on building out its manufacturing facilities around the world, and it's getting a lot of business, both over in Europe and certainly in North America. And what it's really, really known, I guess, best for is on the DRAM side. It really owns about 2/3 of the DRAM business out there, and so this is a focus for and the DRAM is the whole memory side of the chips, which you can see can actually go into all the way from mobile devices into electric vehicles, autonomous vehicles, into data centers and so on. So it's a very, very popular product. We love Micron.
Yeah, lots of.
Yeah. Thanks, Kumal.
Lots of applications. Okay, you know what we're going to do though is we're going to go to a break so that we can get to your past picks coming up after the break. So everyone watching right now, you want to stay tuned. Kim Bolton will tell you about his past picks coming up. Welcome back to Market Call. Kim Bolton is with us this hour taking your questions on technology stocks, but now we're going to take a look at some of his past picks. So these were your picks, Kim, back on March 31st of 2021. First up, we have BYD Company. I have to admit I don't know this one very well, but at the time it was $43.27, now $49.87. So your total return here coming in at 15%.
Thanks, Tara. BYD. We actually, we don't own it in the fund anymore. Yeah, it started out at, I talked about it at $43. We actually sold it up at $73, which was just a little bit less than the price target. But it's interesting, you know, the BYD, it's a Chinese technology conglomerate. They're involved in a variety of markets, from automobiles to electronics and renewable energy. And what really sort of brought us to this, because we weren't that bullish actually on some of the Chinese stocks. And actually, when just to sort of as a tangent, we sold out of most of our Chinese technology stocks last June. But we did keep BYD. This is a favorite actually of Warren Buffett. Warren Buffett owns 9% of BYD, and it's really one of the leaders out there when it comes to electric vehicles. It's the largest battery manufacturer in China, so it supplies to all those other EV companies in China. And it's the world's largest producer of lithium batteries for electric vehicle production and capacity. So the 12-month price target of the analysts out there on BYD is $70.50. So it's got a very, very decent runway. So as I mentioned, we own it in a few of our separately managed accounts, so you could buy it here around $50, add to it down at around, $46 to $47, and then down around $42, $43 with a stop at $39.
Okay. Next, we have Infineon Technologies. So at the time, it was $42.29, now $31.29. So this is a loss here of 26%.
Yeah. So, and Infineon is it's a semiconductor company in Europe. It's a Dutch/German It's the biggest semiconductor company in Europe. But of course, with all the geopolitical events that are going on in Europe, there's been a big retracement. We still own it. We're not adding to it right now. But it's a leading supplier of chips and power management chips for the electric vehicles and autonomous driving, and it's just had a tremendous run. We shaved a little bit off up in the 50s earlier this year, but it is we hold about a 1.5% position in the fund, and it's just. It purchased another semiconductor company called Cypress over in Europe about a year and a half ago. So it made them, Infineon, the largest of the semis out there. So you could buy a position here, add to it down around 25, and then down around 22, 23 with a stop. I would say around 19 or 20.
Okay, and the last name here of your past picks is a big one, Sony. We all know that name. At the time, $106.01, now $97.46. So a loss here in total returns of about 8%.
Yeah. Well, you can see that we didn't have any of the software application or the internet software, because they're the ones that have actually come down a lot. Sony, we still own about a 2.5% position, currently around 97. There's a 12-month price target on this of $149, so it has a great upside runway. So it's a Japanese conglomerate that operates all the way from electronics to semis to sensors. You know, Sony owns about a 44% market share of the sensor market, and so you know, sensors are used in fridges and in washing machines and in phones and electric vehicles and cars, and they own 44% of the market share out there. The other thing which is great about this, it's a diversified company, is that they are a leader when it comes to gaming consoles. Now Microsoft is starting to beef up that side of it, but basically Sony owns about 64% of the market share of gaming consoles out there. You know, to put that in perspective, over the last year, Microsoft has shipped about 2.8 million units versus Sony that has shipped 4.5 million units. So it's on top of that, they've really got into the sort of the connected cars and smart mobility space, and it has offerings of car infotainment and in-cabin monitoring. And then they recently bought a video gaming developer by the name of Bungie. We really like this company, and you know, when it comes to the sensor and the gaming side, this is a key holding.
Okay, so still a buy.
Yes.
So with that, of course, that's Kim Bolton, Black Swan Dexteritas. We'll take another break, but we'll be taking more of your calls after that. Stay tuned. Welcome back to Market Call. Kim Bolton is on the show today talking about sensors and gamings, taking your questions on technology stocks. And now we have Vic in Toronto with a question. Vic, what's your question?
Hi, Kim. I just wanted to get your take on here. At the time, things low 20s, and obviously, using tech wreck, that limited as well. And I just wanted to see if you still own it and what's the outlook on it, and how would you play it going forward? Thanks.
Palantir.
Palantir. Oh, okay. Thanks, Vic, for your question. This is a fascinating company, Palantir. We don't own it in the fund. We own it in some of our separately managed accounts. More recently, because it's gotten awfully cheap. You know, it's down 10% over the last month. It's down 44% over the last 100 days. We did own it, and you know, I guess about a year ago we bought it in the low 20s, and we sold it because it just sort of spiked. It was actually right after its listing. They didn't do it on an IPO. They did a direct listing, and it sort of flew under the radar. And so we bought it right around 20, and then it just sort of popped up to 27, 28, and we sold it. But here we are. It's trading at $11.85. The average analyst out there has a 12-month price target of $16. So Palantir, it's run by some very, very smart, deep-pocketed people out of Silicon Valley. And basically they're sort of the leader when it comes to artificial intelligence. And they have two analytical platforms, Gotham and Foundry. Gotham is more geared toward government-type clients, and then Foundry is more toward enterprise clients. You know, the whole total addressable market of artificial intelligence, they say, or as Gartner Research would say, is about $120 billion. So, you know, the whole artificial intelligence area, there's a lot of people that talk about it, that say that they participate in it, but for the true leaders in there, like a Palantir, it does have a very, very nice moat to prevent penetration from competition. You know, Palantir's average length of contract is about 3.5 years, and they have, you know, pretty high customer concentration. About 60% of the revenue come from about 20 clients, and about 2/3 of those 20 clients are government contracts. So, but they're long contracts. So Palantir, Vic, I would approach Palantir more as a trade rather than an investment. And so you could buy it down here at around $11.85. You could even add to it down at around $11 and maybe down around $10.50 with a stop at just under $10. It's got a $16 12-month price target.
Okay. Now, I think this is Peter who calls in quite often. Peter from Vancouver, go ahead with your question for Kim.
Thank you. Very nice to see your always happy face. And the great technician, Mr. Kim Bolton, the tech guru. Great to see you. May I send my regards to your son? How may I ask you about AMD? Thank you very much, Kim the Great.
Thanks, Peter. AMD. So AMD sits in the whole sort of semiconductor side. Currently trading at $110. If you look out over the last little while, it's down all the way from about $160 back in November of last year down to this 110. So this is just a great example. This is a core holding of ours in our stock in our fund, in the BSD Global Tech Hedge Fund. AMD together with NVIDIA are really the two leaders when it comes to the designer of chips. But with the rotation over into somewhat the financials, certainly into the energy complex, a lot of money was taken out of the tech side. The good news is that, well, two parts. Number one, at least in our fund, we can actually short equity indices to actually protect any of the losses that we have in our individual single stocks, like an AMD. So that's why we're pretty flat on the year so far. But the other side is that it's got great upside. You know, it's got a 12-month price target of $155. So, you know, you're looking at a 45% runway ahead of us. And, you know, once everyone digests what the central banks are going to do in raising interest rates and they get more clarity on that, and hopefully the geopolitical side settles down, stocks like AMD are just going to be off to the races. And when it happens, you've got to have it. So really like AMD. But make sure that you have some protection. So that's one to watch for sure.
Yeah. All right. That, of course, is Kim Bolton. He's with Black Swan Dexteritas. Stay tuned. He'll be taking more of your questions on technology stocks right after this break. Welcome back to Market Call. We have Kim Bolton answering all your questions today on technology stocks, and we're going to get through quite a few of them here. So first up, Ara in Montreal is asking about SOX. What is your opinion on this company, SOXX?
Thank you. And I'll make these quick. SOXX, this is the largest semiconductor ETF. I think when it comes to the semiconductors, you're probably better to actually buy the single stocks and the leadership in that. And I talked about that on the manufacturers and the foundries and the designers and the equipment makers. But, you know, on the SOX, you know, the biggest holding is actually Cisco, which really doesn't sort of fit. So I'd recommend to go for the single stocks.
Okay. Next, we have Am in Ottawa, and he's asking for a recommendation on electric vehicle car manufacturers. Do you have one?
You know, this is the OEM and the manufacturers. You know, do you pick a Tesla? Do you pick a GM or a Volkswagen? They've all sort of got beaten up lately. But I'd actually go back to the one that we spoke about earlier, which was BYD. Mind you, it's on an ADR on the New York Stock Exchange. But it has a good runway. It's a massive company. It's the biggest electric vehicle manufacturer in China. It's the biggest battery manufacturer, and Warren Buffett owns 9% of it, so I'd go for BYD.
Oh, okay. Now, Kingston, we have Ryan calling from there, and he is wondering about Global E Online.
Okay, so Global E Online, they currently are trading at $32. You know, if you go back a year ago or less than that, it was up at $80. So this is one of those software companies that software application companies that has really been shaved. But I think it's a great bargain down here. You know, I don't think it's going to go back toward 80, but basically Global E Online, its customers are Amazon or Shopify. Shopify actually has a considerable, significant ownership in Global E Online. And Global E Online on their software facilitates global e-commerce for companies out there. It helps them with their software when it comes to taxes, foreign exchange, and so on. And it's really the leader out there. So I don't think it's going to go back toward 80, but you know, the 12-month price target out there is right around $60 right now, and it's sitting at $32.50. So it's got a good runway.
Okay, and Lauren in Edmonton wants to know your thoughts on bandwidth.
Okay, this is another one that has really had some difficulty out there on the software application side. And one of the problems with bandwidth is that it really doesn't have very good guidance when it comes to becoming a profitable company. So I know I talked about it before. We have got out of it since, so I just sort of stay away.
Okay, fair enough. Now let's head over to Revelstoke, BC, and Matt is wondering about Facebook, or I guess Meta.
Yep. So Meta currently trading, you know, who would have thought that you would be able to buy Facebook Meta under $200 when it was, gosh, it was only, it was up around $375 only about 6 months ago. You know, what I would recommend is that now you can, I'd buy calls. I'd buy sort of 6, 9, even 12-month calls out there. You might have to pay up because of the volatility factor side of it. but it's gonna take a couple of quarters for Mr. Zuckerberg to actually gain back the trust that he lost when in the last earnings, and you know, they disappointed on the downside. They were very honest in coming out and giving and lowering guidance, and they were uncertain about, you know, how the runway was going to play out for them. But you know, they are a leader when it comes to the social media side. They have a lot of tools in their kit. Next to Facebook, they're the second largest digital advertiser out there. So it has great free cash flow, but it's going to take a couple of quarters to actually gain back the trust of investors. At least that's what I think. But I think it's worth actually buying, you know, a little longer dated call option.
Perfect. Okay, that of course is Kim Bolton, who was very gracious in moving through us with that speed reading there. And you know what's coming up after the break is his top picks, so you'll want to stay tuned for that. Welcome back to Market Call. Kim Bolton of Black Swan Dexteritas has been on the show today talking technology stocks. And now it's time for your top picks. So first up, Alphabet. Why did you choose this one?
3 reasons. Quality, growth, and valuation. You don't often get a situation like this, that quality company that is growing hand over fist and actually has a great runway. So currently trading, around 2,600 and no, about 2,700. So, but it's got a 12-month price target of 3,325. You know, it is one of the best positions companies out there when it comes to the digital advertising, but it also has a lot of horses in the race, all the way from Google Cloud to Google services and other bets. So we just really, really like this, and it has great value at this stage.
Yeah, it almost has its hands in almost everything. Your next pick here is Intel. Why did you choose this name?
Yep, five reasons. Number one, Intel's breadth of product line gives it a huge advantage going forward. Number two, Intel has added to its capabilities by acquisition every year. Number three, Intel is an amazing free cash flow machine. Number four, it has an enviable gross margin side of it. And number five, it's a leader in central processing units, CPUs, and autonomous vehicle chips. And has good value. Currently trading around $48, and it's got a $60 price target by the analysts out here. So you know, you can buy some here, buy some down around 45.5, and then around 43.
So those were 6 points, a lot running for Intel. Now the first two names, Alphabet and Intel, I know very well. This next one, Datadog, I don't know. Why did you choose this name?
Okay. Datadog's certainly, it's trading right now 127.5, 128. It's got a 12-month price target of $222, $100 upside on this. So Datadog develops monitoring and analytical tools that sit deep within the enterprise IT stack. And their software watches other software to monitor its performance and to alert the technology staff in the firms of any problems that are out there. So it's sort of like, you know, when you go to the pool and you got a lifeguard, Datadog is your lifeguard in the cloud, in the IT stack. And you know, take it from me, or you can take it from the world's largest technology research firm, Gartner, that just stress that Datadog is the leader when it comes to application monitoring space.
Oh, so it's a bit of a safety net. That's interesting. Thank you so much.
Yeah.
That, of course, Is Kim Bolton sharing all of his expertise this hour on technology stocks. He's the president and portfolio manager with Black Swan Dexteritas. Thanks so much for your time this hour. And before we let you go, we'll just take a quick look at the market, and it has been quite a bit of a turnaround today. We're seeing all North American markets have moved pretty solidly into the green at this point. And so when we look at even the Dow Jones up 780 points right now, coming in just over 33,400, but really leading the way here, we've got those technology stocks. You can see that on that tech-heavy NASDAQ, it's up about 3.5% really at this point. And our index, the TSX, also doing incredibly well, up 273 points, coming in at 21,472. And it's such a change from what we were seeing yesterday and really the last 4 days. We've been really seeing materials and energy stocks leading the way. That has been turned on its head today. Those are the ones that are really in the red, really pulling down the TSX in these markets. Really what's leading the way on North American markets at this point: information technology, healthcare, financials. So that's really where we're seeing a lot of the movement today. But just taking a look at that oil price, I mean, it's down to about $110 a barrel WTI right now. These are off of the 124, 125 highs that we were seeing over the last few days. These are levels we haven't seen since about 2008. We're also seeing a pullback, of course, in our Western Canadian Select. So that one is now down to about $104 a barrel. So taking a slide right along with WTI. So with that, John Ehrlichman will be on with Bloomberg Markets right after this break. Stay tuned.